So we have McDonald's reporting on January 23rd, and like all retail, there's a lot of have and have-nots in this space. McDonald's in particular, there are some have-nots. We'll start off with that, and then some of the haves and why you hold that for AAP.
Yeah, it's going to be ugly, Jill. There is no doubt about it. And the stock has actually pulled back. It got to 97 earlier in the year. It pulled back. It's about 90. It's yielding 3.7. That's what it's got going for it, that its yield is attractive. It's very well covered. I expect the dividend to increase over time. The reason it's going to be ugly is because the company really is in the crosshairs of a lack of product, a lack of marketing, a lack of leadership. There's a lot going on in addition to having higher costs. So I think what you have here is you have a new head of the North American division. It's a very large division for the company. And he actually was at the company many years ago and was very successful in driving their profitability. So he just entered into the fray in October. So we're just going to beginning to see some signals and signs as to why this is potentially an exciting turnaround story with new products, new innovation, spending more on digital and that sort of thing. So I'm looking for the conference call commentary, not so much the results, because I know the results are not going to be good. Right. The conference call commentary about what kind of changes they're going to be making in North America, and then what they'll do is then they'll roll it out globally.
Right, but this is the kind of story that you love. It's a longer-term, fundamental restructuring story. So they've got the cash, they're shareholder-friendly, and the restructuring stories you have to spend money to make some money. Sure. So this could be a later 2015, 2016 story if you have the time horizon.
I think so, and I think JANA Partners involved in the name as well makes it also interesting from an activism point of view. I'm not sure the CEO is going to go. I know a lot of people think that he should because they really have lacked in terms of the profitability, and the share price has lagged. But I think that there's enough here that they can do, they can work with. They have, as you said, the balance sheet to really work on the product story. And they had an analyst day in December, and they really focused on creating a new burger, creating more fresh, creating kiosks, putting money in, to your point, so that eventually you're going to see these investments lead to better returns and better growth. And I think at this valuation, having lagged the restaurant peers by 30% over the last 2 years, I like the risk reward. And again, as I say, that 3.7 dividend yield acts as a very nice support. So if it's weak on Friday, we're interested in buying it.
Well, we get paid to hold it, right?
That's right.
Okay, thanks very much.